Hello and welcome to our video on how Greece has never fully recovered from the 2008 financial crisis. The 2008 financial crisis was a global economic downturn that affected many countries, but Greece was one of the hardest hit. In the aftermath of the crisis, Greece's economy and society were left in shambles, with high unemployment rates and widespread poverty. Despite efforts to recover, Greece has yet to fully recover from the crisis and continues to struggle with ongoing debt and economic issues. In this video, we will explore the impact of the 2008 financial crisis on Greece, the efforts to recover, the current state of the Greek economy, and the reasons for ongoing struggles. Join us as we delve into this important issue and shed light on the ongoing challenges faced by Greece. The 2008 financial crisis had a profound impact on Greece, exacerbating existing economic weaknesses and resulting in a protracted period of instability and uncertainty. Greece's economy had long been burdened by high levels of public debt and deficit, weak institutions, and a lack of competitiveness. The crisis exposed these vulnerabilities, with Greece's GDP contracting by almost 25% from 2008 to 2016, and unemployment rates soaring to over 27% at the peak of the crisis. The initial impact of the crisis on Greece's economy and society was devastating. The recession led to a sharp decline in economic activity, with businesses closing and investments drying up. High unemployment rates left many Greeks struggling to make ends meet, while poverty and social inequality increased. The crisis also had a profound impact on the country's political landscape, with the rise of populist movements and anti-establishment sentiment. To address the crisis and restore economic stability, Greece implemented a range of measures aimed at reducing the country's debt and promoting economic growth. Austerity measures, such as reductions in government spending, increases in taxes, and privatization of public assets, were intended to reduce the budget deficit and promote fiscal discipline. In addition to austerity measures, Greece pursued economic and structural reforms aimed at promoting competitiveness and attracting foreign investment. This included the liberalization of markets, improvement of public administration and governance, and the encouragement of foreign investment. Greece also implemented measures aimed at improving tax collection, such as fighting tax evasion and corruption, strengthening tax administration, and modernizing the tax system. While these efforts were aimed at stabilizing the Greek economy and reducing the country's debt, they have not been entirely successful in achieving these goals. Greece's economy has experienced some growth since the crisis, with GDP increasing by around 2.3% in 2019, before being impacted by the COVID-19 pandemic. However, the recovery has been fragile, with the country still struggling with high levels of debt and unemployment. As of 2021, Greece's unemployment rate stands at around 15%, which is still significantly higher than the pre-crisis levels. Debt levels also remain high, at around 200% of GDP. One of the biggest challenges facing Greece is the lack of investor confidence. Despite efforts to promote foreign investment, many investors remain cautious, given the ongoing economic uncertainties and structural weaknesses. Political instability and uncertainty have also been a significant obstacle to economic recovery, with frequent changes in government and the rise of populist movements contributing to a lack of confidence in the country's political institutions. One of the main reasons for Greece's ongoing economic struggles is the inadequate implementation of reforms. While many reforms were proposed and implemented following the crisis, there have been significant challenges in effectively implementing them. Resistance to change, lack of political will, and weak institutional capacity have all contributed to the slow pace of reform. External factors have also played a role in Greece's ongoing struggles. Global economic conditions, such as the impact of the COVID-19 pandemic, have had a significant impact on Greece's economic performance. Political instability in the European Union (EU) has also created uncertainties, with ongoing debates around Brexit, the rise of populism, and other geopolitical developments contributing to market volatility. The ongoing debt crisis in the EU, with several countries facing high levels of debt and limited fiscal space, has also impacted Greece's economic prospects. In conclusion, the 2008 financial crisis had a profound and lasting impact on Greece's economy, which the country has struggled to overcome. Despite efforts to address the crisis and implement reforms, Greece continues to face ongoing challenges such as high debt, unemployment, lack of investor confidence, and political instability. While the country has made some progress, it still has a long way to go to fully recover from the crisis. The ongoing struggle of Greece serves as a reminder of the devastating impact that economic crises can have on a country and the importance of addressing the root causes and implementing effective policies to promote economic growth and stability.